All right. Good morning, everybody. Good morning, everybody, and happy Thursday. Today is June 13th, 2024. And the top story this morning is once again higher for longer. The Federal Reserve had their FOMC press conference yesterday, as I'm sure many of you already know. And while the press was hounding Jerome Powell, please, sir, can I have that rate cut now? Why wait until September? Why wait until December? Don't you know we got this election going on? Can we have that 25 basis points? And Jerome Powell said, no, you're not getting it. Keep waiting. Keep hounding. Higher for longer. Well, I mean, what he actually said was, based on the totality of the incoming data, we are confident that substantial progress has been made on inflation, but further progress is required before we can have sufficient confidence that we're moving sustainably towards our 2% goal, consistent with our dual mandate. The same wishy-washy talking points. All right, so we got all the things we usually get from Jay Powell. There wasn't a lot of groundbreaking things said on that FOMC press conference yesterday. He basically said, look, we're getting there. Inflation is coming down. Yesterday's CPI print was a little further evidence in that direction. I know people get upset when they hear that inflation is coming down. A lot of people, keep in mind, inflation is the rate of change, and the rate of change of price increases is less than it was a year ago in most categories, not all, but prices are still rising. And of course, Powell's saying, hey, we're making progress, but we're not there yet. We need more data. Somebody asked him, hey, did you update your summary of economic projections based on that CPI that came in lower than expected yesterday morning? And Powell said, look, all these market participants, all these committee participants, all the Fed governors, they're given a chance to change their expectations for rate cuts or their dot plot position after the CPI came out. And most of them don't. Most of them don't update them after CPI. I mean, in their defense, these guys are only highly paid bureaucrats, and it's not like they can be expected to update a one-character long data point, how many rate cuts this year in a 6-hour window. I mean, these people are human after all, right? Apparently, most of them don't update the SEP after the CPI came in lower than expected. So some people are out there saying, hey, yesterday's dot plot that was released by the Fed showing only one rate cut this year doesn't reflect the CPI data. And that's not what Jerome Powell said. Powell said, yes, it does reflect the data, and most people chose not to update it. So yesterday's CPI did not really move the needle on rate cuts this year. That was the takeaway. Further data points are needed. Now, one data point or one thing Powell said that really caught my attention, and in my opinion, it was huge. It was during the scripted question and answer segment. And again, these are all pre-approved, pre-screened questions. They don't throw curveballs at Jay Powell at these meetings, all right? It is a very choreographed dance that goes on there with those journalists and the Fed governor. And he was asked a question about the labor market, and Powell actually acknowledged for once the suspicious nature of the data on the non-farm payrolls, of the jobs number that we got last Friday. Recall last Friday, we added something like 272 or 282,000 jobs. But there was a big difference. I talk about this on my channel all the time, how the establishment survey that measures businesses is saying we're adding hundreds of thousands of jobs, but the household survey that counts people is saying we're losing hundreds of thousands of jobs. And the gap between the two surveys has been exploding for the last few years. Well, Powell actually acknowledged that yesterday. Now, his wording was very careful. He said, there is an argument that job gains haven't been as strong as the surveys suggest. He didn't say he thinks. He said there is an argument. I think the actual wording was there's an argument that job creation numbers are overstated. That's not Jerome Powell saying, I think they're overstated. He's saying there is an argument, as in this melonhead on Twitter keeps saying the jobs numbers are BS. But the fact that Jerome Powell acknowledged that, that's huge. And he would go on to describe the dubious nature of the jobs data and the difference between the two surveys. So what Jerome Powell is saying there is he's acknowledging the jobs market is not as strong as they're advertising in the mainstream press. He didn't explicitly say that, but just the fact that we're talking about that is an acknowledgement that the jobs market is not as strong as they're saying. And in my opinion, that is actually very dovish of Jerome Powell to do that, because remember the dual mandate, inflation and unemployment. Well, if he's saying unemployment is actually worse than they're saying, that means we're actually closer to the rate cut than they're saying. Because he's saying, hey, maybe there's this between now and September, we get some jobs data that is pretty lousy, and that forces us to cut sooner. So I think a lot of people glossed over that. Aunt Janet is out in the press this morning yelling. She's saying, our jobs market remains strong and resilient, and job creation numbers are encouraging. She's out there trying to save face. Jerome Powell just basically said the jobs numbers are BS. He didn't use those words, but that's my interpretation of what he said. And it is the correct one based on my analysis of the data that you've all seen on some of my live streams. Also going on this morning, we got PPI, the producer price index, another data point suggesting lower inflation. PPI came in down from last month and below expectations once again. We'll get into those numbers as well. And we got some jobless claims data just hit the tape. Initial jobless claims took a jump higher this morning. So a little bit of weakness in the labor market right on cue. So the data is bringing us closer to the rate cuts. But Powell still says one, maybe two rate cuts this year. That's still what the dot plot is saying. So we got a lot of data coming out. Let's see. We talked about the PPI. We talked about the jobless data. What else? We got Broadcom is out this morning with a big earnings beat. It was actually last night they released it. Big earnings beat from Broadcom driven by AI sales. They're announcing a 10-for-1 stock split. That stock is way up this morning. Tesla is set to approve Elon Musk's massive 50-some-odd billion dollar pay package, the one that judge in Delaware took away from him. Well, it looks like that shareholder vote is going. Elon is out on X this morning saying it's going my way. They are going to announce that at 4:30 p.m. Eastern time. But it looks like Tesla shareholders are set to approve Elon's big payday, and they're actually going to approve the movement of the company from Delaware to Texas. So it seems that judge cost the state of Delaware a lot of money when he took away Elon's payday. Now, look, regardless of your position, here's the question for you. What is Tesla worth without Elon Musk? And if the answer is less than, more than $50 billion to the downside, which I think is accurate. If Elon Musk were to die of a heart attack tomorrow, I think Tesla stock would drop by more than $50 billion. Therefore, Elon is worth that $50 billion, and you pay it to him. I mean, I'm not a Tesla shareholder. I have no horse in this race, but that's what it comes down to. Is the guy worth what they're paying for him? What's the company worth if Elon leaves? And it looks like most shareholders are saying it's time to pay the piper, piper being Elon. And also, we got more fraud in the commodity space. Yesterday, beneath the radar, but behind all the CPI and all the rate cuts, there was two big stories yesterday, or I should say two small stories that add up to something big in commodities. There was a tin fraud from Brazil that ended up being sand, and there was a shipment of copper from Russia that ended up being granite sent to Turkey, and now nobody can even find the smelter where this copper supposedly came from. What is going on in commodity space? Recall last week we did that talk about the 100x increase in expected credit losses from non-payment at Trafigura, one of the biggest commodity trading houses in the world. And now yesterday we got two stories about more fraud in the metal space. I don't know what's going on, but there is a lot of these little anecdotes piling up. There are just warehouses full of bricks and rocks and sand that we thought was metal. I don't know who's at fault. I don't know if there's geopolitical play involved here, but this is getting more and more frequent, and the numbers are getting bigger and bigger. Keep an eye on that commodity space. And with that, why don't we shrink my big melon of a head and let's get into these markets. And guys, don't forget that like button and that subscribe button if you're new here. It really helps with the YouTube algorithm. And come have your coffee with the melon heads every day, because we do this every business day. And right now the S&P is up another 12.5 points ahead of the opening bell. Little bit of volatility here. That first big green candle, that was the PPI announcement. Stocks were surging initially off another lower than expected inflation point. And then the number came pretty much right back down, and now we're trading where we were before PPI came out. So the algos had a little bit of an initial hiccup, and now we're right back where we were. Same thing in the Dow, step change up, and then right back down to where we were. The Dow is down 91 points, or 0.25%. And the NASDAQ is flying high once again, up 126 points, or 0.65% to the upside. selling in the Dow, buying in the NASDAQ. The S&P is along for the ride. It's another one of those sell everything and buy AI days, I guess. NVIDIA's up big pre-market. I think Broadcom earnings are probably driving a lot of this buying in tech this morning, but stocks are mostly to the upside this morning. Meanwhile, the DXY is up 21 basis points or 0.2% this morning at 104.86. The dollar initially took a dive off of that PPI news. Again, a less aggressive Fed, a more dovish Fed on lower inflation numbers. But then the market just gave that right back here. So we're sitting a little bit higher than yesterday, but not by much. And the bond market, the yields continue to move lower here. Check out the 30-year Treasury yield, 4.446. That's down about another half a point. The 10-year at 4.268, down another 2.5 points. It was down big again yesterday. The 2 years at 4.697, up 5 basis points. And I'm sorry, down 5 basis points. And the 1 month is at 5.363. Now, recall, guys, the inverse relationship between yields and bond prices. So we've been seeing these bond yields falling like crazy this week. That means people are piling into U.S. Treasuries, driving those yields lower. Take a look at this long-term chart of the 10-year Treasury. This is going all the way back to January, the start of this year. I have been talking about this trend line. Here, let's put my red trend line back up. Something like about that. Maybe about that. But there's better technical analysts out there than me, guys. But that's a pretty obvious breakdown and a retest in that trend. Check this out. You know, we've been falling. We had jobs numbers. We had all kinds of data suggesting dovish Fed. We came back up and we retested on that jobs report last week, and now we are falling straight down again. It looks like a new trend in the 10-year Treasury here. Yields just keep falling. Moving over to the commodity space, we had a pretty good run in metals early yesterday, and then we gave it all back, and now Mr. Slammy is in the driver's seat again this morning. We've got spot gold is at 23.18. That's only down about $6 this morning, or 0.25%. But check out spot silver at $29.30. That's down another 42 cents this morning, or 1.4% lower. We've got July copper futures at 454. That's down a couple of pennies here. July platinum futures are down 1%. September palladium futures down 0.75%. And July WTI crude oil futures at 78.57. That's up a nickel this morning, so no movement in the oil space. Taking a look at the silver chart this morning, we got another red candle. That's not so encouraging, but what I do like is look at that nice little bounce off the 50-day moving average that we got this morning. Despite the beat down, we were down over $1 at one point, bounced right off of it. So if that 50-day line holds, I would see that as very encouraging, but we'll keep an eye on that one. And also Bitcoin this morning is down about $490 on Coinbase, trading at $67,771 just off its recent highs. Little bit of news in Bitcoin this morning. I'm not going to spend too much time on this, but MicroStrategy proposes a $500 million convertible note to boost their Bitcoin stash. So MicroStrategy, led by Michael Saylor, they're borrowing money in order to buy more Bitcoin. These bonds, they're going to be convertible for shares in MicroStrategy stock. So Saylor is levering up here. He's taking out leverage, and he is going to go ahead and buy more Bitcoin. This is kind of how he rolls. The NASDAQ listed firm currently holds 214,400 Bitcoin, and they're looking to buy more. But let's talk about the main story of the day. Waiting for an interest rate cut. The Fed is unlikely to act before December. That's at least according to the Fed's words. The market believes otherwise. The market is still saying September. But yesterday, Jay Powell, his words were pretty hawkish if you listen to just what he was saying on the surface. If you're hoping for lower interest rates, start thinking about the holiday season. The bar to cut the Fed funds rate from its current 5.25% to 5.5% target remains high, as Federal Reserve Chair Jerome Powell made clear today in comments at a press conference following the June 11th and 12th FOMC meeting. Any change before the Fed's December meeting seems unlikely. Again, the market is not saying that. Take a look at the CME futures here. Market is saying no rate cut in July, still 91% chance, 92% chance they do nothing. But the market seems to think September is when it happens. We got a 62% chance of a cut and even a 6.5% chance of two cuts by then. So the market is still kind of calling Jay Powell's bluff here, saying we want two this year. Powell's saying one. It will take a convincing slowdown in inflation in the coming months or a sudden spike in the unemployment rate to get the Fed to move. Neither seems likely this summer. For those hoping for a clear answer after Wednesday's consumer price index reading, Fed officials' latest dot plot forecast for interest rates and economic trends, and Powell's press conference, confidence was in short supply and may remain so through late 2024. May inflation figures were a step in the right direction, but challenging comparisons lie ahead. Meanwhile, job market strength will keep Fed officials from worrying they need to lower interest rates to rescue the economy. And again, that job market strength, we hear so much about that. It is a myth. It's a unicorn. It just does not exist. Even Powell acknowledged it yesterday. Again, I want to draw attention. The fact that Powell referred to the two labor surveys as dubious results, and the fact that he said that there is an argument that job creation figures may be overstated, he's acknowledging that, look, guys, these jobs numbers do not pass the sniff test. It's been that way for a while. He didn't say what's causing it. In my opinion, it's politics infecting the data to make somebody look good. But the fact is the labor market, it just isn't as strong as they're saying. It's been obvious for a long time because wages have barely kept up with inflation, at least for the last few months. And for the several years before that, wages majorly lagged inflation. And if we actually have a strong labor market, then labor wouldn't be getting cheaper relative to everything else. That's not how supply and demand works. Labor would be getting more expensive. Powell is finally acknowledging that. Although, again, that is a very dovish signal that he would do so because he's saying the jobs market isn't as strong as we think, and therefore maybe I need to act to fix unemployment sooner. His words, not mine. I don't think the Fed ever really fixes anything. They just move problems around and make the total problems much bigger. Now, here is the summary of economic projections as provided by CNBC this morning. This is the dot plot that the Fed is talking about. Each one of these little clusters of dots, each dot represents one Fed governor and where he thinks interest rates will be at the end of the year shown. And as you can see here, we've got 4 Fed governors are saying no hikes this year. We've got 7 Fed governors are saying 1 hike this year. And we've got 8 governors are saying 2 hikes this year. And so the average is a little less than 1 hike for the year is what the summary of economic projections is. But I would add that this chart does not make any distinction between voting and non-voting members of the FOMC. So for all we know, all the voting members are down here saying 2 this year. So that's an important distinction there. But right now, the Fed governors, they did not change their dots, or at least most of them didn't change their dots after we got that lower than expected CPI yesterday. Shifting gears a little bit to the producer price index. We got more inflation data this morning. U.S. PPI, the headline year-over-year number came in at 2.2%. That is much lower than the 2.5% that was expected and down from the 2.3% that we had back in April. So we got a little bit of a lower PPI here. Now, take a look at this chart. Does this show PPI inflation coming down? Not really, does it, right? One data point to the downside does not make a trend. And if we zoom out onto a 5-year chart of PPI here, you can see PPI came way down in 2022 and into 2023. But we've actually been trading sideways, if not with a tilt to the upside, ever since mid last year, starting around July. So I'm not too encouraged by this PPI data, but it is down from last month. And so people are going to latch on to that one. Let's also look at the month-over-month headline number for PPI. That came in negative. So we've actually got a little bit of producer deflation, at least for the last month, down to by 0.2%. That's versus a positive 0.1% expected, and also down from a positive 0.5% just a few weeks ago in April. Now, the core PPI number strips out volatile food and energy. That one came in at 2.3% year over year, down from 2.4% last month and below the 2.4% expected. Again, is this a trend that is dropping? A little bit. You can't really draw too many conclusions from this data point. Yeah, it's down from last month, but last month was way up from the priors. And if you go to a 5-year chart, again, it's kind of the same thing. Inflation spiked, it came down, and now we're trading sideways. Is this a sustainable move toward 2%? You guys let me know in the comments what you think. Now, we also got a little bit more. What do we have? The month-over-month number for core PPI. I think we already did that one, right? Yeah, we already did that one. Let's talk about some jobless claims data. Initial jobless claims for the last week were 242,000. So we got a little bit of an increase in the initial jobless claims. Where's my data here? 242,000. That is up from 229,000 last week. So we got a change of 13,000 to the upside. Not a huge increase, but you'll notice, guys, we're now out of this band that we were in for quite a while. So we got some weakness in the labor data. That's going to bring us a little bit closer to that rate cut, although, this doesn't seal anything in stone. But this is also the highest initial jobless claims since the second week of August, or I believe the third week of August, 242 versus 248 on August 12th. So this is the highest print in a while for the initial jobless claims. And the continuing jobless claims also made a big step change up for this week, 1.82 million versus 1.79 million the week before. And that is going to be the highest one going back to January of this month. So we got some weakness in the labor market showing this morning, just after Jay Powell acknowledged that the BLS jobs numbers are BS. And so I think, again, the takeaway here is a little bit dovish, but not so much. We're still looking at September at the earliest for that rate cut, maybe December, maybe 2 by December. Now, let's also talk about a couple of stocks that are moving this morning. Broadcom set to surge the most in 4 years as AI fuels growth. We got another chip stock doing well on artificial intelligence this morning. Broadcom, a chip supplier for Apple and other big tech companies, is on track for its biggest surge in 4 years after its latest results topped estimates, lifted by a robust demand for artificial intelligence products. Second quarter profit was $10.96 a share, excluding some items, the company said in a statement. That's compared with average estimate of $10.80. Revenue rose to $12.5 billion, compared with projections of 12.1. So we got a top and a bottom line beat here for the company. Broadcom's second quarter results were once again driven by AI demand and VMware, he said in a statement. Revenue from AI products alone reached $3.1 billion in the period, according to Hock Tan, that's their CEO. Total AI sales for fiscal 2024 will be more than $11 billion, Tan predicted, and non-AI chip revenue, which is basically Apple, which has been sluggish recently, bottomed out in the second quarter and is likely to recover modestly in the second half of fiscal 24, he said during a conference call. Broadcom makes a lot of chips that go into the iPhone. The iPhone sales were slumping big time in the first quarter. Remember, Apple posted some pretty lousy numbers, but we've been covering on this channel. There have been a couple of anecdotes showing that, hey, the shipments to China have ticked up. Those price cuts for the iPhones have worked, and Apple's starting to move sales again. That is now starting to show in Broadcom's earnings, who's saying, hey, our non-AI chip revenue, in other words, our cell phone revenue, it bottomed out in the second quarter. We finally turned a corner there. So that is also contributing to these better numbers here. Broadcom shares rose 14% in pre-market trading on Thursday. If the gain holds, it will be the biggest intraday increase since March of 2020. The stock was up 34% to $1,495 this year through the close of trading on Wednesday. The Palo Alto, California-based company also announced a 10-for-1 stock split effective July 15th. So they're following in NVIDIA's footsteps with that 10-for-1 split. And, the stock this morning doing pretty well, up 14.2% ahead of the opening bell, trading at $1,708. So good day for Avago shareholders, Avago being the predecessor that bought out Broadcom and adopted the name, hence the ticker AVGO. And also, Tesla is up big this morning. Musk says Tesla shareholders are voting yes for his $56 billion pay package. Man, how'd you like to get a $56 billion paycheck? Try not to spend it all in one place, Elon. Tesla shareholders were voting in favor of a $56 billion pay package for Elon Musk and a move to the electric vehicle maker's legal home to Texas, the CEO said on social media on Wednesday. Thanks for your support, Musk said on his social media platform X late Wednesday. In his post, Musk included charts showing that resolutions were set to pass, though shareholders are allowed to change their vote up to the start of the annual meeting. And Reuters is like, hey, it's not too late for you guys to change your mind because we don't like Elon Musk because of what he did with Twitter. So go change your votes. Kind of interesting. A person familiar with the preliminary voting tally said a combination of big institutional investors and retail investor votes were responsible for the support. The results will be announced at a meeting at Tesla's headquarters in Texas at 4:30 p.m. Eastern time today. So Tesla shareholders appear to be supporting Elon and that move to Texas. Delaware is really going to take a financial hit from that one. They're going to lose a lot of tax revenue here. Tesla shares right now are up 6.5% on that news, trading at $188.90. And again, guys, I know a $56 billion pay package, it seems obscene to a lot of people. That's more money than most people could ever spend in 100 lifetimes. But the question is, what is Tesla worth without Elon? And if you think Tesla is, Tesla would lose less than $56 billion if Elon left, then vote no. If you think Tesla would lose more than $56 billion, then vote yes. It's a $565 billion company after the big drop that Tesla shares have taken this year. So is Elon worth 10% of the company? My gut tells me, yeah, he is, because if Elon was to get hit by a truck tomorrow, I think Tesla would drop way more than 10%. Also, two more going on this morning, guys. Keep an eye on this. Chinese traders' $20 million pile of Russian copper goes missing. How do you lose $20 million of copper? Well, I don't think it ever really existed to begin with. The purchase from a mystery Russian smelter never made it to the port. The metal is apparently listed as granite and likely to have ended up in Turkey. What the heck is going on in commodities? A giant state-owned Chinese commodities trader is nursing losses after a shipment of copper from Russia worth nearly $20 million went missing, reigniting fears over fraud in the often secretive market for buying and selling raw materials. Wuchan Zhongda Group, which had sales of 580 billion yuan, it's about $80 billion US in 2023, bought 2,000 tons of refined copper from a Russian smelter that should have been delivered last month. It never made it to port, according to people with knowledge of the incident. Instead, the metal was listed as much cheaper granite and has likely ended up in Turkey, according to the records of the shipping line that handled the consignment, the people said, declining to be identified. Staff from the Chinese company have visited Russia to investigate what happened, although they've been unable to determine where the smelter is even located, the people said. So the Chinese state-owned commodities firm bought $20 million of copper from a smelter that apparently may not even exist. They can't find it. It ended up being granite, which is worth much less, and they sent it to Turkey instead of to China. So you've got a $20 million copper fraud. Just hit the tape yesterday, June 12th. Now, on the same day yesterday, we got this story. Trader Gerald Group says it was hit by a $49 million tin fraud. So pick your metal. There's a fraud to go with it. The company takes a $37.3 million provision after the deal went awry. Commodity trading giant Gerald Group said it paid almost $49 million for tin that turned out not to be tin. Gerald Group made a provision for $37.3 million in its 2023 financial accounts after the deal to buy Brazilian tin went awry, according to a note in its 2022 accounts filed in the UK company's house. The firm has started investigations and engaged parties to assist in recovering the funds. Upon arrival at the final destination of final weighs and assay results, it was discovered that the counterparty failed to fulfill its contractual obligations to deliver the concentrate, the group said. Bloomberg reported last year that the company was hit by a loss in its tin book, with several senior executives subsequently leaving the firm. Reuters reported last June that Gerald had bought cargoes that were supposed to contain tin concentrate in Brazil, but turned out to be sand. A string of scandals has shaken metals markets and ensnared a number of trading houses in incidents that reveal shortcomings in the oversight of shipments and warehouses. Trafigura is still in court over an alleged $500 million fraud in nickel, while last March bags of nickel owned by JP Morgan Chase were found to contain stones. So you can add to that tin that ends up being sand, copper that ends up being granite and sent to the wrong country. And we were just talking last week about that $330 million credit provision by Trafigura, the fact that they're 100-fold increasing their expected losses. And then you got all these anecdotes about fraud going on all over the world in the metal space. I don't know what is going on here, guys. And this is where I kind of like cross the line from reporting to like just theorizing and ad-libbing here. But something is up in the metal space. There are warehouses full of crap that isn't what it's advertised as. And there is definitely an increase in the frequency of stories like this. I don't know if this means the paper trading scheme is coming unwound. I don't know if this is some kind of economic espionage involving BRICS countries. It always seems to be the BRICS countries involved in these big frauds. Chinese warehouses full of fake copper seems to be a thing. But whatever it is getting more frequent and it's getting bigger. And that Trafigura story last week, that 100x increase. Something major is up in the commodity space. Keep an eye out for stories like this. And I know a lot of you guys follow the metals market. If you see something like this, drop me an email or a DM on X because I want to know about these stories. This is going to be big before this thing is done. And I just want to say thank you so much to Viv B, who says MBS, that's Mohammed bin Salman of Saudi Arabia, will not be attending the G7 meeting in Italy. Guess no need if petrodollar agreement isn't renewed. Rutro. Well, look, the petrodollar, it came and went, right? They didn't renew the agreement. There was talk of some kind of new big U.S. defense agreement with Saudi Arabia. I heard that in the press earlier this week. So I don't know if the U.S. is trying to use its military to try to pull Saudi Arabia back towards the dollar here, even as they cozy up to Russia. I can tell you MBS is not a fan of Biden's. I don't think he's even a fan of Trump. Look, the guy had an American journalist executed and cut up into pieces and carried out of an embassy in bags. And we don't really like that kind of stuff here in America. And so the guy has become something of a pariah on the world stage. And this downside to that, and again, he should be a pariah for killing a journalist, but the downside to that is now Saudi Arabia, with all their oil muscle, is cozying up with our geopolitical rivals, the Russians and the Chinese. And so we get to enjoy the fallout from that. And you're right, not attending the G7 meeting, that is absolutely a snub, Viv. I don't share the alarmism about the BRICS currency. I know that is a de-dollarization effort that is ongoing, but it has been met so far with precisely 0.0 success. So we'll see. Are they able to pull this off? I don't think they're going to go to some kind of a gold-backed currency because Russia and China are countries that are going to be they're dependent on money printing to keep their economies afloat in the future. And if they pin their currency to gold, then they can't print money. So I don't share the BRICS alarmism so much. They are trying to de-dollarize. I just think it's going to take a lot longer for them to do it than they're saying. Thank you very much, Vid B. I appreciate the super chat and the support of the channel. And thank you to JJ Watt. That's a powerful name, JJ. Another horrible earnings call from Dave & Buster's yesterday. Definitely a slowdown in the family dining sector. I hadn't caught that story, JJ, but it doesn't surprise me. People are eating out less. And I would point out to the CPI data we saw yesterday, there was no change in food at home in the food category, but food away from home continued to get more expensive. And restaurants are hurting. Dave & Buster's earnings, Red Lobster's bankruptcy, Cracker Barrel closing a lot of restaurants. A lot of these restaurants are losing pricing power. When they raise their price on their menu, people stop eating there. And Dave & Buster's earnings that I haven't seen up until this point, probably another data point supporting that. Thank you, JJ. I appreciate that anecdata. The restaurant space is tough to be in right now, guys. We'll see how that summer travel works out, but right now the indications are it's not going to be as good as last summer. No Taylor Swift tour to prop up the economy this year. And thank you, Cole Marsh, who says, have a day, folks. Love you. Cole, you always end on such a pleasant note. God bless you, sir. Thank you for the super chat and the support of the channel. Appreciate the good vibes, everybody. Thank you so much for the super chats and for having your coffee with the Melon Heads this morning, guys. Thank you to all my channel members and Patreon supporters. I appreciate that very much. Links down below, should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, until next time, live small and dream big.